Hey family, it's Camila Stevenson. All right, let's talk wealth. You know something that I've noticed? Everybody in crypto right now is staring at the price, checking their portfolios every hour, panicking when it drops, celebrating when it pumps, arguing online about whether we're in a bear market. And while people are busy watching candles, something else is moving behind the scenes. Something quieter, something more important, something most people won't even notice until the move has already happened. Listen, I'm not watching the price right now. I'm watching what's being built, who's building, where the money is flowing, what's happening underneath the surface. And that is what I want to break down today. Not whether or not you should buy or sell, but what's being built while everybody else is distracted by red and green candles. Because if you only watch the price, you're going to miss the setup. And the setup, that's everything. Now, listen, this is not financial advice. I'm just sharing how I think about the markets, what I'm seeing, and why I don't get emotional every time the candle moves. And if you love content like this, go ahead and hit that like button and make sure you subscribe so you don't miss the next video. All right, let's talk about something that needs to be said. Listen, most people are really bearish right now, and that's because of looking only at the price. All right. And the price is the last thing to move, the very last thing. Now, everybody's staring at these charts and they're reading these comments and they listening to the fear and watching their portfolios every 10 minutes. No wonder why they can't see what's actually happening. It's because they're emotional. They're zoomed in and they're reacting to every red candle like the world is ending. But that's not how wealth works. That's not how cycles work. And that's not how smart money moves. When you look at the macro instead of the moment, you start to realize we're not in the same place that most people think we are, because the crypto market doesn't move because someone on Twitter got scared. It moves because of liquidity. And most people don't even understand liquidity. They don't understand what's happening in the financial system. They don't understand the bigger forces that move all markets, not just crypto. And that's why retail gets bullish at the top and bearish at the bottom, because they're watching emotion, not economics. They're watching price, not policy. They're watching charts, not money flow. But when you take a step back and you look at the economic cycle, the liquidity cycle, and what's happening underneath the charts, you start to see something completely different, something bullish, something bigger, something macro. And that's why I keep saying I'm macro centered. Now, I want to break down what is really going on, because this right here is why I'm still bullish, even while the majority is terrified. I'm focused on liquidity because liquidity is the oxygen of every market. When liquidity drives up, everything else feels tight. And when liquidity returns, everything starts to expand. So let's talk about the big things happening underneath the surface that most people aren't even paying attention to. Number one, the economy has been contracting for a long time. There's a thing called the PMI, basically a report card for how the economy is doing. Above 50 means growth. Below 50 means contraction. And guess where we've been? Below 50 for months and months and months. This isn't a small dip. This has been one of the longest tight periods in modern history. And here's why that matters. Every time we've had long contraction like this, what comes next is expansion. Historically, this is the quiet part, the part where the smart investors start positioning and the masses are still complaining. Now, number two, the Fed is ending QT, quantitative tightening. QT is basically the system sucking money out of the economy, like draining water from a pool, okay? That's bad for all markets. That's bad for stocks, crypto, real estate, everything. But guess what? QT ends on December 1st. No more draining, no more tightening, no more financial vacuum pulling everything downward. We're going from constant pressure to neutral. And moving from pressure to neutral is a much bigger shift than people realize. It doesn't mean that you're going to wake up to a moon pump. It means the wind stopped blowing against you. And historically, when QT ends, we start entering the part of the cycle where markets breathe again. Now, number three, the government finally reopening means almost 1 trillion is re-entering the economy. This is the part nobody's talking about. When the government shut down, money stopped flowing and contractors didn't get paid. Projects paused. We saw a lot of that. And that means that invoices froze. And now that the government has reopened, nearly 1 trillion is staged to be released back in the economy. And what that means is that Contractors are getting paid, projects restart again, invoices clear, supply chains move, money starts circulating again. This is real liquidity and it's not theory, right? Every time the TGA, and that's basically the government's checking account, starts flowing like this, PMI starts rising, production starts rising, and expansion follows. Now, the fourth thing you got to understand is liquidity always moves before the charts show it. So most people think that the charts always tell them the story. No, the chart reacts to the story. Liquidity hits the system first, then the markets move. Liquidity turns like a tide. It's slow at first, and then boom, it's all at once. And the crazy part is that risk assets, especially crypto, are usually the first to react when liquidity comes back. Not usually the stocks, not usually the housing, but crypto, because crypto is the most sensitive to liquidity shifts. So here's the bottom line. The entire macro picture is shifting from pressure to expansion. Even if fear is still high, and we've seen it some of the highest that we've ever seen it, and even if the charts still look weird, even if everybody still feels bearish, this is exactly the moment when positioning matters. Okay, so now that we understand what's going on beneath the surface, let's talk about what this actually means for crypto, because this is where most people is going to miss the whole point. Remember, as I stated, crypto reacts to liquidity faster than any other asset class, faster, like I said, in real estate, stocks, bonds. Why is this? It's because crypto is still a young, high beta market. It's sensitive. It moves quickly. Yes, it's volatile, but we're used to that. It responds immediately when money starts flowing back into the system. So what most people are not realizing is, number one, crypto has been resilient through contraction, even with the tight conditions, even with fear, even with the government shutdown, even with high rates. Crypto still made higher highs and higher lows. And that's not weakness, that's actually strength. That's a market that wants to expand once liquidity returns. You got to look out and see the bigger picture with this. Most people think we're in a full-blown extended bear market. They really do. Just look online. It's everywhere. People are afraid. You see it in the fear index, right? But we actually never did the typical multi-year lower low pattern like past cycles. It's been a slow climb in contraction. Now, imagine what happens out of contraction, right? And that's where we get into when liquidity turns, crypto moves first. So the historical pattern every time is liquidity starts to rise, PMI recovers, QT quantitative tightening ends, and government spending rises. Crypto is the earliest mover because institutions look at risk assets as the best place to front run expansion. So crypto is like the sprinter on the track. It's the first one out of the blocks when the gun goes off. Stocks then follow, housing follows, the economy follows, but crypto usually moves first. Now, this is the moment that we have really been positioning for, okay? And retail don't understand this because they are emotional, but institutions are strategic. Retail, they start to sell in fear, but institutions, they buy fear. Retail waits for charts to look safe while institutions wait for macro to turn, and then they move quietly. And that's exactly what we've been seeing right now. OTC buys, that's over the counter buys. We've seen dark pool buys. We've seen institutional accumulation, ETF interest, renewed liquidity flows. Listen, this is not random. It is really positioning. Now, I want to stress this, that the risk right now is not being invested. Most people think the risk is, what if it goes down? But based on macro data, the real risk is, what if you're not positioned when liquidity pushes everything up? Crypto doesn't wait for you to feel confident, right? You're going to miss this. It moves when you're scared. It takes off when you're doubting. It rallies when you're thinking nothing is happening. And that's why I've stayed bullish, not because of hope, not because of hype, but because the macro is lining up in a way that most people aren't even noticing yet. And once liquidity fully hits the system, retail investors will FOMO in months after the smart money has already positioned. And that's how they squeeze the price up even more. And so now I want to stress again why I'm bullish in a moment where everybody else is bearish, doubtful, or confused. And it's not because I'm ignoring the volatility. I see it like everybody else. My portfolio, I've seen it go down and it's been a little scary sometimes, but I'm bullish because I'm paying attention to the things that actually move markets and not the things that distract people. So number one, I'm not reacting to the noise. I'm reading the cycle. People see these red candles and the dips and they assume disaster, but I see liquidity shifts and assume opportunity. People stare at these charts. I'm looking at the plumbing underneath the chart. Charts tell you what happened. Macro tells you what is coming. And when you understand the difference, you stop moving like the masses and you start moving like someone who is building real wealth. And number two, I'm not investing with emotion. I'm investing with awareness. I keep talking about this idea of emotion. If I was invested based on how I felt, I would have sold years ago like everybody else, but I've been holding. Fear can't be your financial strategy. Emotional investors never win cycles. They show up late, they exit early, they chase confidence instead of value. But I'm still bullish because I refuse to let fear talk me out of opportunities that my future absolutely needs. And I'm also not looking at one candle. I'm looking at the environment. A lot of people think technical analysis tell the whole story, and it tells a part of the story, but it doesn't tell the whole story, okay? Technical analysis is a tool, but macro is the foundation. If QT is ending, if government liquidity is returning, if PMI is starting to recover, if institutional money is creeping back in, then I'm not worried about short-term chop because the environment is shifting, even if the chart hasn't caught up yet. And then I'm also bullish because historically, this is when new cycles begin. Look at every expansion in history. Fear was high, sentiment was low, money was tight, people were bearish, and right under the surface, the conditions for expansion was forming. So this moment right here, it looks just like that. It's not loud, it's not obvious, it's not exciting. People are scared, but the best moments to position are never loud. They are quiet, they are uncomfortable, they are confusing. And that is why I'm bullish. Not because the chart is screaming buy, 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 but because macro is whispering, pay attention. Something is shifting, all right? And I'll tell you something I see all the time. The future belongs to people who can see what others are too emotional to notice. That's why I stay calm. That's why I stay patient. And that's why I'm still building even while others are doubting. By the way, since we're talking about understanding the bigger picture and not getting lost in the noise, if you want real education that actually teaches you the markets step by step, you need to check out Stock Up University. I've been going through the curriculum myself, and listen, it will level up your financial intelligence. Stock Up University is running a Black Friday sale right now. And let me tell you, I got an extra special discount for you. If you go through the link in the description, use the code EARN to get the discount. Now, what should you be doing with all of this strategy, patience, and positioning? Okay. That is the question. What do you do with all of this that's being thrown out to you? Okay. Because hearing the macro is one thing, knowing how to move is another. And let me just be honest with you. This is not the time to be frantic or reactionary. This is the time to move with intention. Here's how I'm thinking about things. And obviously, you got to make your own decisions. But this is the mindset that's allowed me to stay calm no matter what the charts look like. All right, so number one, stop trying to time every wiggle of the chart. You're not going to catch every bottom. You're not going to pick the perfect day, and you don't need to. If you understand where we are in the cycle, your job is not to outsmart the market. Your job is to stay positioned while the macro shifts. People lose more money trying to be perfect than they ever lose from just being patient. Number two, build your exposure slowly and consistently. I'm not throwing my whole bag in at once. A lot of people do that and they get in trouble. I'm also not sitting on the sidelines waiting for some magical green candle to give me permission. Consistency beats perfection every single time. If you want to build wealth, small, strategic, disciplined moves will outperform emotional, dramatic ones always. Number three, protect your mental space. If checking your portfolio every 10 minutes is stressing you out, just stop checking it. Don't torture yourself. You know what? Sometimes I got to stop checking mine. Your nervous system needs calm to make good decisions. Okay. Fear doesn't equal strategy. Okay. So you can't build long-term wealth from a short-term emotional place. Now, number four, know why you're investing. If your reason is hype, you're going to fold, okay? But if your reason is long-term macro shifts, liquidity cycles, global adoption, regulation, institutional interest, you're going to stay steady. Your why has to be bigger than the candle that you see today, all right? Number five, Don't underestimate the moment that we're in. I'm going to say this again. Most people miss cycles because they're too zoomed in. They're watching the chart, but the chart is the last thing to move. Sometimes you just got to zoom out. The fundamentals are going to shift first. Liquidity is going to shift first. Macro is going to shift first. And that is where we are right now, in a place where the data is shifting, even if sentiment hasn't caught up yet. This is where the calm, informed, patient investor wins, right? This is where positioning matters. And to be quite honest, you got to have a game plan in place already before a lot of this stuff takes place. All right, family, if this helped you to see the market a little clearer, go ahead and hit that like button for me and make sure that you subscribe so that you don't miss the next one. Please do. Again, hit that like button because a lot of people will watch the video, get to the end, and still don't hit that like button. Now, we're going to continue to talk about wealth and just navigating this world with confidence instead of chaos. And listen, drop me a comment below and tell me, where's your mindset right now? Are you leaning bullish? Are you nervous? Are you trying to understand the bigger picture? Let's talk about it. I always read the comments and I love for you to just be honest with where you are. Now, before you go, let me remind you of two things that can genuinely level up your game right now. And we're running a Black Friday sale. Now, number one is Stock Up University. If you want real financial education, the kind that gives you structure, confidence, and clarity, you need to get into Stock Up University. I have been going through it, like I stated, and it really will elevate your whole understanding of the markets in ways that, man, you're going to be astounded. All right. And also remember right now for Black Friday, Larry Jones and his program, he's running a sale, but you're going to get a special discount if you use my link. So use the code EARN at checkout to get the discount. The link is in the description. If you're serious about building wealth the right way, it starts there, right? And then also my membership community is the second thing. If you want to go deeper, if you want the support, the conversation, the mindset guidance, live coaching, and a safe place to ask questions, build your portfolio, and get some hands-on training, then that's what my membership is for. And since it's Black Friday, you can also use my code there, Black Friday 300, to get the discount before it ends. So check the links in the description. Take advantage of the Black Friday offers. It will not last long, okay? I want you to move with intention, not emotions. So we're trying to get you a game plan together to get you moving in the right direction before the end of the year, because I'm telling you, 2026 is about to be crazy. All right, family, stay wise, stay wealthy, and I'll see you in the next one.